you just look at it from a GDP standpoint, California's GDP is twice the GDP of Canada. If California were a country in itself, I think it would be the 5th largest country.
Right.
And there's so much opportunity here. Look, we're really excited about the industry that's here. You know, there's great people, there's great clients, there's great industry. There's so much that's great about California and the West Coast if you think about the innovation and the energy that comes from just being here.
Hello and welcome to today's Commonwealth Club World Affairs program. My name is Dan Ashley, news anchor at ABC7 and a proud member of the Commonwealth Club World Affairs Board of Governors and your moderator for today. So now it is my great pleasure to introduce Darrell Hackett, the President and CEO of BMO Bank.
Thank you, Dan.
Thank you, Darrell. As CEO, Darrell is responsible for leadership and performance across all of BMO's U.S. operations, and they are extensive, and we're going to talk a good bit about that. Many of you have likely seen BMO's advertising around the Bay Area. I'm certainly grateful for that at ABC7 because we see those commercials quite often during our newscast, so we appreciate that support. But they're great spots, as you know, and I want to ask a lot about that as well. In 2023, BMO completed the $16 billion acquisition of San Francisco-based Bank of the West, which doubled the U.S. footprint, making it a major player in banking in America. Under Darrell's leadership, BMO is now a top 10 U.S. bank with significant growth ambitions, so they're not going to stop there, and we'll explore that as well. In contrast to recent high-profile corporate departures from the Bay Area, Darrell and BMO are committed to the region and delivering on a more than $40 billion community benefits plan with $16 billion in commitment for community giving and lending here in California. So they're very committed to this market. The bank prides itself on its purpose-driven culture and corporate citizenship, something we will explore in detail. BMO is driven by a single purpose: to boldly grow the good in business and life, and is committed to making progress for a thriving economy, sustainable future, and an inclusive society. While the BMO name may be new to the Bay Area, it is certainly not new to banking. And they've been around for a long time, in business for more than 200 years, interestingly. Darrell has been at BMO for about 20 of those years and has held a variety of leadership roles at the bank. Previously, he served as president, BMO Wealth Management US. Now he is in this role. No stranger to the Bay Area, Darrell has lived here for a time. He earned his MBA from Stanford University's Graduate School of Business. He is a proponent of purpose and values in his leadership. Darrell is actively involved in his community and serves on several boards. He is also a member of the Federal Advisory Council of the Federal Reserve Board. Ladies and gentlemen, please a very warm welcome to our guest today, Darrell Hackett.
Thank you. Glad to be here.
I guess he went to Stanford, and now that Stanford is part of the ACC, Atlantic Coast Conference, I guess my first question is, are you going to become accustomed to losing to my alma mater, the University of North Carolina?
I'm still getting used to the ACC part of the equation.
It's a very strange arrangement, but that's a topic for another day. I do want to start with this. It's been a little over a year since you became president and CEO of BMO USA. And since Bank of the West became BMO, that strikes me as a lot like drinking water out of a fire hose. That is a huge undertaking, not just for you, but for the bank itself. How's it been going?
Well, first of all, thank you very much, and so happy to be here. It's going well, and it's been quite a year. I've been in this chair, in this role for close to a year and a half now, and we've been running. Yeah. And but it feels good because we had an opportunity to just 1 week ago complete the systems integration for the Bank of the West platforms onto BMO, and it was an incredible success, and not just from a system standpoint, and I can talk about some of the measures that we look at there, but from a cultural standpoint as well. Like a lot of our colleagues here that are also in the audience, like we're just so proud of the work that we've done to make sure that we put together the best team in the area, but also just take care of all the clients that are here in the Bay Area.
That's not an easy, obviously integrating the technology is always a challenge, but even more so, I would think, the culture and doing that in a way that makes everyone feel comfortable. How did you navigate that? What were your guideposts as you went through that process?
Yeah,
You told
sure.
your team.
Sure. You know, I think success actually starts in the integration planning. And even as we were thinking about the right partners for us as we grow, I'll state we started with 2 purpose-driven organizations. And you heard our purpose, to boldly grow the good in business and life. And by the way, if there's any 2 things I want everybody to take away from this conversation is our purpose, boldly grow the good in business and life, and we're pronounced BMO, which Dan has done very well. We're paying a lot of money to get that message conveyed here in the Bay Area. But, we definitely were 2 purpose-driven organizations, and I think for those of you that know the legacy of Bank of the West, you can tell, like they were very centered on having an impact to the community and the environment, and that definitely resonated with us. But as well, we also take a very transparent approach, and these situations are always complex. The planning is always difficult, but we're always very transparent, and we worked with a lot of really great colleagues. Many of them, most of them still with us today, particularly in our client-facing roles. But even those, and you know how it works when you do an acquisition, even those that either we didn't find the right role for or chose to go somewhere else, we had really great relationships with them and continue to have relationships, and hopefully they feel as if the bank that they ran is in good hands now.
And that they can feel good about
Absolutely.
that change. Yeah, and it's interesting, I know as you said, you're spending a lot of money advertising this new name and this new presence, even though BMO's been around for, as I said, more than 200 years. What are the challenges specific, forget about the rest of the country, out here when it comes to replacing the name of a bank that is obviously Bank of the West, very Western and focused on this area? Is that tricky to make sure the presence still feels the same for customers?
Yeah, it's very tricky, and we had to do a lot of thinking about that because lots of respect, history, and equity that comes out of the Bank of the West name. And I don't know about some of you, but I actually remember the name in watching King Richard, the movie. I think it was the first tennis tournament that Venus Williams actually played and won.
Oh, that's right.
Yeah, see?
That's right.
Connecting the dots.
I forgot about that.
But there was connection to both the Bay Area and then, sports like tennis as well. But for us, we had to think about it, all respect for the name. It's part of the reason why we wanted to enter the market the right way. And here in the Bay Area, as well as California, Denver, lots of the other geographies that came along with Bank of the West. It's actually not just California, even though California was the biggest presence that Bank of the West had. So we were really thoughtful because what we had to do is we had to introduce ourselves to everybody that's here. And yes, I maybe haven't been around for 200 years, but we have been around for more than 200 years. And we have a long history. And it was important that everybody here in this new market understands that we're not new to this.
Right.
We're pretty good at this. We're always there. We're helping our clients make real financial progress, and we're really excited about the opportunity to do it here. And it's that messaging that we really wanted to convey.
And I want to ask you about this before I move on. Speaking of the messaging and the advertising effort, those spots are really clever. I'm sure you had a great agency that put those together for you, but finding that great spokesman, he's got the nicest face, nicest man, that's not an easy task because that is he is a living logo for your brand.
He really is. And for those of you that know BMO guy, Lamorne Morris.
The guy at the desk.
He's the BMO guy. And he's really been great for us, and I think we've been great for him as well. And before I even get to Lamorne, I'll tell you about the spots. Like, what's so great about the spots, they've actually, they've gotten the best reactions on the continent, frankly, for a bank.
Really?
Just in terms of people's reaction, because we have a good formula, and our formula is pretty simple. We watch our commercials, and you be the judge, but we cite a problem that consumers have. And then, you see BMO guy behind our desk, and he offers a solution to the problem.
Right.
And we want to do it over and over again in a very witty way. And Lamorne gives us a chance to actually have, a lot of real personality and character around.
He's friendly and approachable.
He's friendly. He's great. Yeah. And for those of you that might be from L.A., he actually lives there. He's from Chicago. He lives in L.A. And I just remember he got a great kick out of it. In L.A., there's BMO Stadium, where LAFC plays in Angel City. And I remember seeing Lamorne, the last time I saw him was at a game. It actually was when our conversion weekend, and Miami was there with Messi, so it was a big night. And I saw him, and I said, "Oh, Lamorne, the face of BMO." And he said, "Oh, Daryl, the face of BMO." So he just has a lot of warmth and wittiness, but I think he actually reacted to it well because he lives in L.A. and his face was plastered all over the place.
No kidding.
And I don't know if you saw, just a few weeks ago, he also hosted Jimmy Kimmel.
Oh.
And he, introduced himself as, that BMO guy as well.
That's cool. Good
Yeah,
for him.
he's been fantastic for us. We're happy to have him.
Well, we're going to delve into all things banking, but it makes sense to start here before we go too far astray. I want to get more about your personal story and how you came to this really important position. And your father was in the Air Force.
That's right.
You spent a lot of time in Tennessee, grew up in Tennessee.
Yep.
How did you wind up out doing what you're doing now? Tell us quickly your journey.
Yeah, that's a great question, and I probably need some tools to draw the career journey here, because I don't think it's the typical path for a bank CEO. But if I take you back a bit, my father was in the Air Force, and my father is from Philadelphia. My mother's from the Philippines, and they met overseas. I was born in the Philippines and came to the States for me before I was 2 years old, and because of his time, we lived in a lot of different places. A lot of that time was places like San Antonio, Texas, Biloxi, Mississippi. You start naming the bases. But my father decided to retire at 20 plus years when we were in San Antonio. And I remember it because I was on the basketball team in the middle school, about to go to high school, and my coach asked me, why would you move to Tennessee? And I didn't really have a good answer, but my father's logic, I'll tell you, he was from Philadelphia. And for those of you that have ever heard of this place called Oak Ridge, Tennessee, it's where they have Oak Ridge National Lab. They participated in the Manhattan Project and building the first atomic bomb. But they also had a lot of ex-military personnel that would come into the city, and they're easier for them to get security clearance. But for me, and actually from my father's perspective, I'm first generation college educated, but my parents are still the smartest people that I know. And he was pretty deliberate around just trying to make sure we were in the environment that he wanted us to be in. And, he, at this point in time, didn't really want to go back to Philadelphia with us. He wanted to put us in a place where, he thought we'd get a really fantastic education. And I grew up, you worked hard and you did your homework, and education was everything. And that's what my parents instilled in me. And we moved to Oak Ridge, Tennessee, and it just so happened to be the city with the highest number of PhDs per capita in the country. And before then, my older brother, I'm a middle child, my older brother, I have a younger sister, but my older brother and I, we just always assumed we would be non-commissioned officers in the Air Force, which is what my father did, and, person that we admire. And it was what our friends were doing. But, once we moved to Oak Ridge and went to high school there, and we did pretty well in math and science, the expectation changed.
Yeah.
So the next thing you know, I'm not only on the path to study engineering, other great people that took an interest in me and saw something that maybe I didn't see in myself at the time would refer to me as Dr. Hackett. And, and that was basically saying, hey, Mr. Hackett, you go get your PhD in engineering. And that was a good way for me to start. So when I decided to go to college, and I stayed pretty close, I went to the University of Tennessee, Knoxville, and I studied mechanical engineering. I didn't think about anything else.
Wow.
My brother studied engineering, I studied engineering, we were both mechanical. My younger sister studied engineering, but by that time we said, hey, Lisa, don't do mechanical engineering if you think you're going to do anything else. She studied industrial engineering, which is the business side of engineering.
And you think that's a product of that town you were in at that time that fostered that interest?
I think there was a really high percentage of students that, went on to study STEM.
Yeah.
And frankly, it's a great thing to do because it can take you into anything from there.
And so that was the path. You were going to be an engineer, and you started at General Electric out of college.
That's right. Right.
And as an engineer.
As an engineer, that's right. And, those are in the Jack Welch days, when GE actually was the largest company in the world from a market cap standpoint. So it was a really great place to go and get training and, frankly, learn to be a leader. But at that point in time, I had figured out that I probably didn't want to do engineering forever. I wanted to get closer to the business side, and GE was a place that would take people that were engineers, and you can go and do anything. And I took that opportunity, and at GE, it was a little like the corporate military. You moved around a lot. I had a chance to live in North Carolina a couple times, actually, close to your home, and a plant in Mebane, North Carolina, but also in Charlotte. I worked in Connecticut, and I worked here in the Bay Area, and that actually brought me to an office that we had in Walnut Creek.
Oh, okay.
But that started my transition from engineer to more business. And then from GE, which was an incredible experience for me, I went to business school, which also brought me back here to the Bay Area, to Stanford.
Right. And one thing led to another. Now you've been a banker for 20 years, and you're in this role. Is it a role, obviously you enjoy the role. It's a stressful role, it's a big role, and it just got a lot bigger. What are the biggest challenges you see for BMO Bank, A, and for the industry, B?
Yeah, those great questions. For the bank and for me in this seat, what I think about every day is I think about the 4 million plus clients that we serve every day. Are we really there for them? Particularly, through an environment like this where we've had prolonged higher for longer interest rates. But I also think about all the employees that work with us every day. We want to make sure that they're able to bring their best selves to the office, and that they're getting what they want out of a career and fulfillment. And it's kind of that easy for me. It's clients and it's employees and it's purpose that's wrapped all around that. In terms of the industry, it has been an interesting time. In banking, you normally think that high interest rates are good because you collect deposits and then you lend them out. But interest rates have been so high for so long that the demand in the market in terms of many businesses investing is actually a bit more muted than it has been for a bit of time.
It stifles investment somewhat.
Yeah, it can. And every business is different. Like we still have a really large cohort of businesses that are able to find the right opportunities, but I think we've also found a lot of caution as well. And I think we've seen that in the average consumer. I think everybody here has felt the impact of inflation.
Sure.
Right? If you just go take a trip to the grocery store and you compare the receipt to what it was just a few years ago, those are big differences. So in the industry, just helping everybody through that. And we went through something that was never thought of, and going through COVID and the pandemic. And I do think the government, the Fed, who I have an opportunity to interact with on an ongoing basis through FAC, Fed Advisory Council, I think they've done a really good job in navigating to date. But there's acknowledgement that inflation it's been tough on people, but at the same time, they found a way to give a lot of support to people, as we were going through the toughest times of COVID.
The Fed is expected to begin to lower the rates, or at least make an initial cut here. Are you optimistic a year, 5 years down the road about where our economy is heading, where those interest rates are heading, or is there concern about a recession?
Well, I do think we are in the final innings of the Fed's series of tightening activities. Just as you said, everybody's expectation is that the Fed will begin to cut interest rates this month.
This month, right.
And I think they look at a lot of factors, but my expectation is aligned with that. I expect that they'll start to cut this month, and I'll expect that they'll continue to cut until they get to a place that that they feel is the right place, the right path. And I actually have a lot of confidence. I have a belief that we're going to be able to manage to a soft landing, and and they're watching the right metrics. And for those of you that are, Scott Anderson at BMO is also on the board here at Commonwealth. He's a real economist, but I think the Fed and all of us are watching the right metrics. And inflation is still high, but it has slowed down. But now, everybody's watching the labor reports as well and how everything comes into balance.
And your sense going forward is we may be able to pull off a soft landing, that we can transition more gently than we had hoped?
That's the sense. That's my sense. I think that's the sense of many. But there's always the unknown out there, and I think we're going to be smart. The people that make those decisions, I think, are being cautious. But I'm hopeful, and I still believe like the U.S. has the best economy in the world, and I wouldn't trade it for anything.
Right. Well, let's talk a little bit about this massive merger and this acquisition, and what opportunity it has created for BMO, and what challenges it creates for you. Because obviously growth is a terrific opportunity, but it is also, there's some pitfalls associated with that.
Yeah.
Tell us about those.
Yeah, well, no, thanks, Dan. Well, look, I'll tell you a little bit about BMO, and maybe I'll take a step back before I go forward here and to give you perspective. BMO has been around for 200 years, doing business for over 200 years. But the first substantial entry into the U.S. was 40 years ago, and we're celebrating 40 years of the acquisition of, in Chicago, everybody would know Harris Trust and Savings Bank. Mm-hmm. So at that point in time, that made this business that I'm running today the 38th largest bank in the country, the third largest bank in Chicago. So that was kind of where it began en masse. That was 40 years ago. 15 years ago, we then expanded throughout the U.S. Midwest with the acquisition of M&I, which was the largest bank in Wisconsin, but also just gave us really great presence broadly through the Midwest. And then, you fast forward a year ago in a week, we converted the systems for Bank of the West, which that gave us an entry in real critical mass, particularly on the retail side and commercial side, here on the West Coast. And definitely in California, but also throughout Arizona and Denver, places where we also had other teams. And by the way, we've been in this market, BMO's been in this market for some time. We've had wealth businesses under the brand of BMO Family Office. We work with a lot of ultra high net worth people, and we have our capital markets business, and we have commercial clients. We also always have done a lot of work in the wine industry and food. But you didn't know who we were,
right?
But now, like, we're here working with consumers, and that's been really fantastic for us. So now we have physical presence in 32 different states, and the goal for us is not to be everything to everybody and to be everywhere, but it gives us the mass and the scale that we really want.
Right.
And
you have dozens of branches here in the Bay Area.
We do.
What, a couple hundred?
We do, and we have over a couple hundred here in California throughout. And if you think about the Bay Area itself, just from a deposit market share standpoint, we would be the fifth largest, and definitely looking to move up those scales. And for those of you that are in LA and Southern California, we're in the top 10 there, and definitely intending to move up the scale.
Just to give us a perspective of the scale, round numbers, when you made the acquisition of Bank of the West, you went from how many branches to how many branches?
So throughout the country here in the U.S., we basically doubled the branch size.
Wow. Okay.
So we also not only doubled the branch size, we doubled our number of retail clients. Our core retail business at BMO, on the legacy BMO side, was a bit larger, but from a branch count and client count, it was practically the same size.
And this big investment you're making in the Bay Area and in California, we've seen in the last handful of years a lot of businesses leave California and leave the Bay Area and leave San Francisco. You guys are coming in.
Yep. Yeah.
Why? What are the opportunities there? Why is that important?
Yeah. Well, look. First of all, what is it that all my friends here in California say? As goes California.
So goes the nation.
Oh yeah, I've heard that a couple times.
We're proud of that.
But also if you just look at it from a GDP standpoint, California's GDP is twice the GDP of Canada, If California were a country in itself, I think it would be the 5th largest
That's
country.
right.
And there's so much opportunity here. Look, we're really excited about the industry that's here. You know, there's great people, there's great clients, there's great industry. We're a bank. Banks do everything. We're, you know, digital is really important to us. Technology is really important to us. We have access here, very close proximity to Silicon Valley. That's good for us from a talent access standpoint. One of the other benefits that we got from Bank of the West, when we think about the new capabilities that we bring, is we really were able to accelerate some of our capabilities. So in terms of the wine practice, we are now one of the largest. And you know, there's no better place to do that than here in the Bay Area. And we've been growing that. You know, we recently also did a lift out of a very significant, or acquisition of a very significant wine and beverage M&A firm as well that complemented our capabilities. And if you go down to LA, we also set up a media practice. And obviously we're here in the Bay Area, a technology practice. So there's so much that's great about California and the West Coast if you think about the innovation and the energy that comes from just being here.
Yeah, lots of opportunity, obviously.
Lots of opportunity.
Yeah, what is your motto again? Find the good, do the
Boldly grow the good.
Boldly grow the good.
Business and life. That's the one request. Second request, you've already passed the test, BMO.
BMO. Thanks to the BMO
Boldly
guy.
grow the good. In business and life.
Talk about growing the good. What does that mean? We can understand what that means philosophically, but where the rubber meets the road. You guys donate a lot of money. Your employees log lots of volunteer hours. It's not just a slogan. You're trying to actually be what you say you are.
Yeah, no, thanks, Dan. And it's, for us, it is, yes, we do give money, but that's not really what this is about per se. We really believe we're a different type of bank. And that's where the purpose comes in. And I look at the purpose in many ways. We do want to help our clients make real financial progress, but you know, we're really aware of the impact that we can have and that we do have in the communities that we serve, and there's a purpose that we want to live as it relates to that. When we closed on Bank of the West, we made a commitment that we call BMO Empower 2.0 because it's not the first time we've done it, but this is where we made our commitment to deploy $40 billion of capital across the country, but $16 billion of that targeted here in California. And what that is really is that is very defined support for small businesses, for in low, moderate income communities, access to mortgages and home equity, community development and investments, and you name it. And that's a big portion of it. And of course, some of that is philanthropy as well. But it's not just us as a company. A lot of the reason people have passion around working for BMO is because it's part of our culture. And you know, one of the best ways for me to describe that is every year we have an employee giving campaign. And what that is that's the power of the organization coming together and doing good. And specifically, and we partner also with United Way, and we partner locally here with the United Way Bay Area, which has been a newer relationship for us, but we have relationships throughout. And we basically ask and inspire all of our colleagues to participate. And every year we're well north of 90% participation rate. Really? And you know, last year, I think we put $40 million to work in terms of philanthropy throughout the U.S. But our employees, they put to work $27 million of their own money.
How much?
$27 million of their own money. And we don't tell them where to put it or who to give it to. We just basically say, we can make an impact. And you know, let's together support whatever organization you deem
and you'll match
worthy,
that and support them.
And we do some matching, and we have a lot of fun with it, and we walk away knowing that, you know, we made a difference.
Yeah. Well, on the notion of being part of the community, giving back and creating opportunity, we've done a lot of reporting around this over the years, particularly in the housing sector, but in small business sector as well. Underserved communities are often at such an economic disadvantage
Yeah.
over generations, and it can be very, very tough to build wealth, to open businesses, to own a home. Obviously, you guys with the money to loan are in a key position to be able to change that. It sounds like that is a focus.
Yes, I mean, look, we think about it. I personally, I think about myself. I was fortunate, like I participated in a lot of the services that people hear about today. I was in Head Start, that was early education, and I told you my parents just prioritized it, and not having college degrees themselves didn't stop them from just wanting what was they knew great for us. So, when we have a chance to bring some level of equity, like we try to do it in ways that actually make sense. Bringing resources into communities, working with small businesses, definitely making differences in some of the low, moderate income communities.
How big a problem is the growing wealth gap between those at the top and those at the bottom and the shrinking middle class in terms of the health of this country from your perspective as a banker?
Yeah, so it's a big challenge, and I think the challenge only gets bigger if you think about just as well as how everybody has navigated even this pandemic that we speak of, or inflation. It hits home very differently to lots of us who depend on gas, high rates of gas to fill up their car to get to the office, and for in the lower income space, it's tougher. It's tougher. Eggs cost more. When you're of higher income, you've probably benefited from the stock market going up because the market has gone up.
Right.
It's gone up pretty drastically. So, you've benefited there. You probably have a good job. It's easier for you to work hybrid. Like you make different decisions. And I do think that's been a challenge in the country itself.
If you're a landscaper, you have to go where the land is. You don't have an opportunity to work hybrid or do some of these other things, work from home.
Yeah. But I think that's something that, again, like the Fed and others, like they watch that just to do what they can. But the solutions, it's not just government policy though. And like there's other dynamics that are in play. And right now, just look at housing. Look at those recent graduates that are looking to get into their first house. Like it's harder now than it's probably been in a long time. And that's not high interest rates. I think everybody thinks interest rates are the challenge. It's not. When you think about it, the supply just isn't there. In this country, we haven't been making the houses. And many of you that are in the Honest today, you probably have decided to stay in your house for a longer period of time because you have a great mortgage. And by the way, I think the number is 60% of current mortgages are 4% or below.
How 60%?
Yeah, it's a really high number. Like there's large incentive for people to stay where they are, and the challenge is that's really good for consumers. And by the way, I think that's another reason that consumers were able to manage through this high inflation level. Again, disparity between homeowners who are building equity and those that actually don't have home ownership.
Sure.
And that in itself would widen. But until the supply-demand gap becomes more closely aligned, like we're gonna have a challenge there, and we have to figure that out. And that is not just interest rates.
Well, that's a great point. And here in the Bay Area, this is a huge problem for young people. And I often feel bad for people in their 20s and 30s, even into their 40s. It's very difficult to come up with a big down payment for a home.
Right.
And then everything around owning a home has become so expensive. Insurance is really expensive here and a challenge. And then you tack on the interest rates may not be the driving factor, but they certainly add to the cost of owning a home here in California.
Absolutely.
Do you see interest rates may come down, but we're not building homes fast enough, and what's the horizon like to change this situation?
That's a good question. I'm not sure. I know many people that have the answer to it, but it's going to take a lot of work to get it back in balance from a supply-demand standpoint. But if you do look at the numbers, like new housing starts they're low. Like they haven't continued at the same rate over the last few years. but the demand is continuing to grow.
Which just drives up the prices.
Yeah.
Obviously. Let me turn your attention to the banking industry for a minute. And we saw in the Great Recession the missteps big banks and investment houses may have taken that certainly fueled the economic disaster that we faced. What is your sense of the responsibility of the banking industry to, you're heavily regulated, but to also self-police a little bit and make sure you don't abuse the situation?
Look,
the advantage that you have, because you have so much control over our economy. As an industry.
That's a great point. Like, banks want the same things that regulators want. Like, we all want safe banks that are there to support not just the banks themselves, but to support all the businesses and all the consumers that we work with. So it is incumbent on the boards of the banks, the leadership teams at the banks, to make sure that their institutions are strong, not just for today, but for any cycle that you see. And that's one thing that I am, incredibly proud of is obviously 200-year history, but we've been there through every cycle. And we're coming off, previous to this last cycle, lots of good years. But you have to always anticipate. And I think about it from a client perspective. When we are working with clients, we're just not trying to be there when it's really easy. Like, we make a commitment to be there through the toughest times, and, get yourself a good banker, make sure you're having the right conversations, and not just, looking for somebody that's going to tell you the things that you might want to hear. And that's our job. Our job is to make sure that the bank continues to sustain, and, we're in a really strong capital position. And I'd say that for, most of the large banks, but that is a responsibility.
It is
that
really,
we don't take lightly.
Right. This is from, let me take a quick look at this. This is from one of the members of our audience, and please feel free to submit your questions either in person or on YouTube. Does BMO see an opportunity to grow its lending activities in the Bay Area, given the region's significant concentration of entrepreneurs and investors? Interesting question, because we are in this area very blessed to have such a, deep pockets.
Yeah, look, the easy short answer to that question is an absolute and emphatic yes. I mean, that's why we're here. We're here to work with the great people, the great businesses, the institutions that are here today. And absolutely, and I spoke about it earlier, we're cognizant every market is a little different. Throughout California, we also are aware like every market is different. And that's where we've doubled down a bit in the wine and beverage space. We've started a tech practice. We started a media entertainment practice. So emphatically, yes.
Why is all of that important? I mean, it's a little bit far afield from just straight banking. Why are you doing that?
Well, because one, there's a need, and two, I think we're pretty good at it, and we have a demonstrated capability. From a commercial banking standpoint, we don't talk about it as much, but we're actually one of the largest commercial banks on the continent. Like, we're one of the 4 largest commercial banks, and that has been our large core business. So we have capabilities across our capital markets business into commercial that we can put to work here. And why it's important here? It's important here because that's some of the industries that are actually here. But at the same time, look, we want to do the core banking with all of you. I should ask everybody to raise and show me your credit card in the audience. That would be the third ask. It would make me happy. But
I'm working on getting a free checking for all of you before the hour is done. So you want to do the basic blocking and tackling of banking,
absolutely,
which is meeting the needs of individual
absolutely.
People and small business owners.
Yeah, and that's the core of what we do.
Yeah.
The core of what we do is we take care of 4 million clients that look a lot like the people in this room, and hundreds of thousands of business owners.
This is from the audience. Banking in general has been going through some major shifts over the past few years. What are some of the key macro trends that you're worried about and excited about?
Great question. Yeah, look, in this moment in time, lots of banks will talk about the increased burden of the regulatory environment. And as I said earlier, like we want the same thing that regulators want. We want to make sure we have the right, strong institutions. But none of us also want to have a repeat of the events that happened in the past. So I think we all play a role in that. But at the same time, we want to make sure that we have the capital available to put to work in the places where it really needs to go. And from an industry standpoint, there's a view that like we're more than adequately capitalized. But I think that's just going to be an ongoing challenge. Like regulators have a job to do, we have a job to do in terms of being able to support our clients. So that's a challenge. What I'm excited about is there's so much great work for us to do. Like I'm excited about BMO in particular. I'm excited about being here in this market. I'm excited about, like, we're one of the few institutions that had the benefit of a really large transformational acquisition over the last few years. So some of the challenges that others are facing, like we were thinking about this before, and this will be too much information, but for those of you that understand the banking world a bit, the Fed categorizes banks, and as banks grow, you exceed thresholds, and when we made this acquisition, we went into a new threshold, so Fed Category 3. And again, putting us in a place where one of the 10 largest banks in the U.S. And with that power comes responsibility. So we were thinking about that and working on that before some of the collapse happened. So we felt that we were a bit in front of it. So we're excited about that because we feel we're prepared. We're prepared for any market environment.
Is the relationship, you mentioned the regulators, is the relationship with the banking industry adversarial enough or too adversarial?
Wow.
Is it too cozy a relationship? Or
No, look, I can't speak to everybody's relationship. I'll speak to the relationship we have. I wouldn't characterize it as adversarial or cozy.
Okay.
I'd say it was appropriate.
It's appropriate.
And you have the right relationship with your regulators, you're debating things that are of real importance. And there should be a respect and a transparency there. But again, like they have a job to do, we have a job to do as well. I can't say that has been the case with every institution because I'm, not there and involved. But look, we've had the benefit of working with some really good people who have great insights, and you have to give regulators credit. Like what they see is they see what's happening when they talk to each other within their institutions. They do have a picture of what's happening across the industry. And, for me, it's helpful when they're actually sharing it because it helps us complete the picture in terms of how to think about things.
And they do share that information?
Oh, absolutely. I mean, I think when you have the right, robust relationship, yeah, that definitely happens.
Well, Daryl, let me ask you about U.S. banking compared to banking that happens, say, in Europe or Asia. How different is it, or how similar is it?
Yeah, well, let's talk about Canada. I mean, BMO is an institution that was started in Canada, and BMO Bank is owned by our Canadian institution there. But in Canada, it's very different. And there you have 6 large institutions, so it's somewhat of an oligopoly. And, here in the U.S., there's over 4,400 banks. And I'm not even counting credit unions. So it's different. And I think there's benefits and challenges that come with that on both sides of the equation. Having 4,400 institutions definitely opens up the market to true competitiveness. Do we need 4,400 institutions? I think we're going to see. Like before that, we had close to 10,000, and there's been some industry trend that has been that there's been consolidation. But 6 is different also, and what's great there is in Canada is clients look to banks for a lot, for everything. And
what do you mean by that?
Well, so I talked about 4,400 banks. Like we do a lot. We do banking, we do retail banking, we do commercial banking, we do wealth management, we do capital markets. So outside of the banking space, when you start thinking about even investment management and wealth management, there's a thousands of other institutions, from the large to the very small, the one person shop, or frankly somebody else, doing the do-it-yourself, the DIY, and managing their own portfolio. There's a different level of competition. Whereas in Canada, consumers tend to think about the banks first when it comes to all of these solutions.
I see.
But again, Harris was acquired in 1984, and the Canadian banking system is known to be one of the strongest in the world. And that's what happened in the great financial crisis back in 2008. Like, that became very clear.
Sure.
So there's lessons that happen in that environment. On the European side, in the Asian side, I'm not as close, but I think there's different challenges there. Bank of the West was owned by a French institution, BNP Paribas, which is, I think, one of the largest in Europe, a very well-run organization. We have the advantage with Bank of the West in terms of we have a real North American presence.
Right.
And that's actually one of the critical advantages that we bring to the table. If you think about just the trade and the flow of business throughout North America, from U.S. into Canada, Canada to U.S., U.S. into Mexico. So being together and consolidated here in North America, I think it actually puts us in a better position to be successful with our new colleagues.
Let's turn, Daryl, for a few minutes to individual banking for a moment.
Yeah.
And individual financial planning. We've talked a lot nationally about the really low savings rate among Americans. The most significant portion of Americans don't have very significant retirement savings. That's a real stressor for individual families, but it's also, on the macro level, more of a concern for us as a society.
Yeah.
What are your thoughts around that as a banker, and what do we need to do to change that, to put people in a better financial position?
Yeah, well, that's a big question, Dan.
Yeah, no, I know it is. It's tough, but it's so fundamentally important.
Yeah, no, it is.
So
It is. And not to make light of it, it is. It's a big question. Again, I come back to purpose, and I think about it in terms of the work that we do in banking, helping clients make real financial progress. I think about that with the many employees that we have, over 20,000+ in the United States as well. We think about that like as a fiduciary to their 401k accounts. We think about it in terms of the way that we provide support and education.
Right.
And again, that's where I think large institutions, not just banks, but large institutions, large employers, like we play a very important role to helping, all of our colleagues and constituents, not just do well now, but plan for the future. Because the world's different. Like, everybody doesn't have a pension anymore.
Right.
Now it's a 401k, and it's a decision you make. So I do think I'm an advocate of education, not just pure academics, but, financial education as well. And I think we all play a bigger role. I do wish, in terms of the solutions, financial education was more pervasive in the schooling systems. And, I studied engineering, but one of my favorite classes was a financial education class that I took in the industrial engineering curriculum, not the mechanical engineering curriculum. But it matters. I don't care what you do. Like, you have to spend the time to understand what it means. And look, I'll reflect on my own career. I've been fortunate in terms of the roles I've had at BMO. I never once asked for it. I like to believe that, I set myself up well to bring value and earn the opportunities. But financial education was always important to me, especially coming from a really great family that just frankly wasn't wealthy.
Right.
So I knew I wanted to learn more. And even I didn't want my kids to always make decisions the way that I had to. Like, I went to University of Tennessee, incredible institution, changed my life. But I'll tell you, having a full ride scholarship, not a scholarship, but every dollar covered, mattered to me more than anything else. But access to education was really important, and we're just trying to make sure that people have the means and the education to plan for some of those big life events that happen.
Well, you and I were talking backstage before we came out that one of the greatest gifts anyone can have in life and advantages is an education.
Yeah.
Because it opens so many doors. And it's a cliche, but it's really true, isn't it?
It is absolutely true. And again, I'm a lifelong learner, but I think it's the right approach to just always continue to learn. And it's part of the reason why I went from engineer into management consultant into banking. Somebody exposed me to something new.
Right. And there was an opportunity to shift your focus. This is from the audience, and I'll dovetail off this a little. Do you see opportunities to partner with San Francisco city government on purpose-driven initiatives? And you can answer that, but also more broadly, there's a lot more talk and pressure these days for corporate America to play a bigger role in public works projects and contributing to building playgrounds, building mixed-use housing and everything else, and really being a partner and leveraging some of the money that they have. What are your thoughts, A, around this partnering with city government, to answer the audience member question, but also this idea that giant companies should or shouldn't play an increasing role in covering some of the costs of running things in this country?
Oh, yeah. Well, look, I'm not here to tell companies what they should do. So I'll speak to it from a BMO standpoint, but we do actually try to do some of that. So the community benefit plan, BMO Empower 2.0, $40 billion we put together, we didn't just sit in the tower and make that up. We had hundreds of conversations with folks in government, some of our community partners who I see some of you in the audience here today. And frankly, we still have a community advisory council that we meet with on a quarterly basis that isn't there to just tell us we're great and we're beautiful. They're there to bring us real information and to give us the right level of effective challenge in terms of what we're actually doing. But we took that information when we actually came up with our plan. Particularly in these new markets, look, I always take the opportunity to sit down with the leaders. And I had a chance to do that here in San Francisco. Leaders in Colorado, definitely in California. We do it in Chicago. We do it in Milwaukee. But we do it because it takes all of us to make a real difference. And again, I go back to our purpose: boldly grow the good in business and life. Being a different type of bank, like we want to make sure that we're doing the things that make the most sense. We also know we don't know everything that's going on in every market, so we're here to listen. But you think about the $40 billion that we're putting to work, yeah, look, we want to have the right conversations with the people that are trying to really impact positive change wherever it is that we are. Okay. So anyway, long way to say, I do think, we do believe that we should play a role.
And by extension, do you think, I know you're not trying to tell other companies what they should do, but you think it's appropriate or not for us as a society to increasingly lean on large corporations to play a role in these partnerships?
I think it's appropriate for clients of any institutions to have an expectation of their choosing. And if you're doing work in the communities, you should expect that institutions that have a presence in your communities are helping to build them.
Okay, well said. Here's an interesting question that I've actually thought about with my local branch. This is from the audience. This person says, I feel that my neighborhood bank is practically empty most days, so what's the future of my neighborhood branch? We don't have to go in as often. I now can do mobile deposit. Is banking changing dramatically in terms of its real estate footprint?
It actually is. Branches still matter, let me just be very clear. But for those of you who have been in it, you're probably not walking through to get the lollipop these days. The interaction is different. Yeah. So I think branches have moved from largely servicing entities to, having more value-added conversations. Like when you're in that moment of truth, when working on a mortgage or you're trying to figure out how to finance your business and you want to sit down and have a real conversation, it's where you go. So I think the purpose has changed. I'm still an advocate and believe that branches are important, and I think they're here to stay. But at the same time, like we're large companies, like we're just as much a digital organization as we are a physical organization. And if you look at the migration of not just transactions, but even onboarding of clients, there's been a big shift to online. And I think it's it's not banks necessarily driving it. Like the world's changed, and all of you as consumers, you expect different levels of service. You expect to have access the way that you want it when you actually need it. So branches are still there, but we're going to continue to serve clients in every way, including digitally, which has been requested.
Yeah, I mean, people want to be able to do things online and
Absolutely.
don't want to have the quote-unquote hassle of having to go to the branch all the time.
That's right.
With respect to those changes and what happened after the pandemic, you now have acquired all of these branches and all of these new employees. What is your sense about the role of work from home and hybrid working, and how has that changed the way you guys do business?
Yeah, look, hybrid I think is here to stay in some capacity. A lot of it depends on your geography, where you work. We all learned during that time that you can work remotely. I happen to go into the office every day that I'm in Chicago, where we have our U.S. headquarters. And we are encouraging our colleagues to come in the office for a couple of reasons. I mean, one, again, thinking about investments and the interactions. Like sometimes there's interactions that you have when you're together at the water cooler that you don't have when you have to set up a Zoom or Teams appointment. So, I think we're seeing that, but running an institution that has presence across the country, I think we're in different places. In New York, we're back. Like everybody's there all the time.
Is that right?
Not just the 5 days a week, probably on the weekends as well.
Interesting.
Chicago, like it's been pretty heavy. And I think it just depends. It depends on where you are. But we're advocates, but at the same time, I do believe hybrid is here to stay. It just depends on what the needs are in terms of your institution, the role that you're in. But I think it's also a personal choice for people as they make that decision. Do you want to work remote or do you want to come in? Like there are conveniences and benefits that many institutions acknowledge. But there's also challenges from a development standpoint, from a culture building standpoint. When you think about onboarding, that is a real challenge that I think large institutions are wrestling with. Even the tech industry, as you guys all know, I think has been wrestling with that.
And when you say onboarding, when new employees start, if they're not coming into the office and developing those relationships, in some ways you're at a disadvantage, I would think.
Yeah. Well, you know what I've found is definitely the senior people tend to come in. The new people, they want to be there and they want to learn. Right. And then it's a little bit more mixed in the middle management ranks. But they have the advantage of knowing the culture and understanding the culture and having experience. So I think the needs are different as you go.
Has it made it more challenging to recruit people because you have to accommodate needs in a way that you might not have had to?
No, I think it's the contrary. It's actually it's opened up the spigot in terms of talent options. So it's made it easier there.
Okay.
What we do is, we have perspectives, we have expectations, but we leave it to our leaders to figure out what's the most appropriate for their teams, because I don't always know. Daryl Hackett doesn't always know sitting in Chicago. But I have great leaders that are spread out through the country that know what's best for their team.
Okay. I want to, in the last few minutes I have a couple of questions from the audience, and then I want to button it up in a different way. From the audience, a year post-merger, what most excites you about BMO's future?
Yeah, that's a great question. Thank you for anybody that's answered that. I'm smiling because we just were having this conversation and we were reflecting on celebrating the 40-year history here in the U.S. and what's come of it. And I think I told you we went from being the 38th largest in the country, third largest in Chicago. Today we are by far the largest Chicago headquartered institution and one of the 10 largest in the country. But I'm really excited about that, not for the sake of being big. It's the level of impact that we really can have. We do, when our clients do well, we do well. And as we've grown, it's given us the ability to have a better impact in living our purpose and doing good throughout the communities that we're in.
Do you anticipate, you've alluded to it, you want to get bigger still? There's an opportunity to continue to grow, to acquire other banks?
Yeah, what I've heard somebody say before, we didn't get here just to get here. We always will have an ambition to do more. Yeah. And, what does that mean? For us, it's not just about saying we want to be a certain size or in a certain number of states. It's really just continuing to deliver for our shareholders, for our employees, and for, the clients that we really enjoy spending time with.
We talked a good bit about giving back in philanthropy. This is from the audience. Under the umbrella of philanthropy, is there a specific cause or causes that you, Darrell, feel most passionate about? And then I'll tack on, and why are you passionate about that cause?
Yeah, okay. Well, so this is the Darrell answer, not necessarily the BMO answer or the banking answer. But for me, education is everything in terms of creating opportunity and, frankly, changing lives. And I'm always passionate about supporting education in the communities and giving people opportunities that they might not have had before. I also think about that from we discussed, financial literacy standpoint. But education has the power to change lives, and I feel that I've been a beneficiary of that, and feel so fortunate. And we really want to figure out how to continue to play that forward.
All right, I'm going to end with this question, Darrell, and your education and opportunity has been remarkable. You're the first person in your family to go to college. You had a father who served great service to the country in the Air Force as an uncommissioned officer. He's still alive. He's in his 80s.
Yes, he is, yes.
He must be enormously proud of what you've accomplished. What are those conversations like with your father when he looks you're a corporate titan now, let's be honest, as this major banker, major CEO.
Yeah.
That's a long way from whence you came and from whence he came. And he set you up, your mother and father set you up for this success, of course, but it must be a little bit awe-inspiring for them. And what are your thoughts around that, and what conversations have you had with your father about that?
Yeah, well, I'll talk about both my father and my mother. Growing up, all of us, we want to make our parents proud. And when I got this opportunity, I remember telling my parents, and they were like me, they were pretty even about it. And I didn't fully understand whether they really understand. They would always ask, what's going on at work? But my father came back to me, my parents came back to me later, and they said, son, I just want you to know how that impacted us. We're so proud of you and your brother and your sister. And, when you told us this, he said, we didn't sleep that night.
Wow.
And, at the end of the day, I think about what they gave to me, and it didn't have to be material. They instilled in me and my siblings the tools that we needed to be successful. And if we can be some form of happiness to them, I'm happy to play that role.
Yeah. Darrell Hackett. Our thanks to Darrell Hackett, President and CEO of BMO, the other BMO guy. If you'd like to support the club's efforts in making virtual and in-person programming possible like this, I strongly encourage you to visit our website, www.commonwealthclub.org. I'm Dan Ashley. Thank you very much for being with us. We'll see you next time. One more time for Darrell Hackett. Give him a big hand.
Thank you.
Thank you.